Hey friends, it's Simon with Trade and Perform Coaching, and wanted to do a quick review on some of the CL trades. Let me get that changed up here real quick. Some of the CL trades that we were looking at today, and some of the basics of what we're looking for in the mentoring room when we're looking to get a trade set up, right, and how that might look. So I wanted to just go with the basics, a few basics, right? And the first basic question we're asking when we're coming into the day is, are we in a trend day or are we in a momentum day or are we in a balance day, right? So how do we figure that out, right? Really important question. So I'm going to start with the basics and actually not go through my setups. So when I come I guess I will go through my steps, but I'll go through them in the end. So before we get started, just a quick disclaimer before we get going. I'll post it up right here. Legal notice, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you cannot afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. So want to tell you right now that the number one thing that I believe in and what I am working is to help traders, working for us to help traders move from boom bust traders going through these vicious cycles of making money and losing money to getting consistent making money day in, day out. It is where my strength is. It is where I am very good at helping others get smooth and consistent, right? And so let's talk about CL for a moment and how do we figure out if it's in a trend or not. So the first thing I want to figure out, right, is what is London high and what is London low. So London generally opens up. Let's open this chart up a little bit. Let's break it into a 30-minute chart. London generally opens up at 2 a.m. Mark it off. And the U.S. session pit opens at 8 a.m. So this is the most important, prior to the U.S. session, the most important time frame of the day for me, right? I want to know, are we trading above or below? So when we look at London low, that would come in right here. And so the first thing is with momentum. You're looking at two different functions for momentum versus balance. First, are we truly in a balanced market, meaning have we broke a major swing low or a major swing high? What does that look like when we come into the day? So when we come into the day, we're going to go back and look, and it's easier if you do this from, for me, the largest time frame that I like to look at, which is the 240-minute chart, right? So I'm going to look at the 240-minute chart. The first thing I'm going to note is obviously we're in a downtrend, but I'm also going to notice that we've lost our momentum. See how we're trading absolutely sideways here? That's the London high, London low. These supply bars, what I refer to them, they're candlesticks, but the wicks are supply bars. These wicks are telling me that in here, that within those wicks, that tells me that there's, how do we get those wicks, right? That becomes the question. And I'm talking about this right here. All these wicks right in here. How do we get these wicks to form? Well, what has to happen, and this is a challenge for some traders, is what that means is as the market, if you'll picture the market coming down and people throwing, I like to imagine people throwing contracts out the window, please get me out. And there's someone underneath there with a bucket catching all those contracts and going, okay, I'll take these contracts, and when I take them, I'm going to push back up, back up, back up, back up. Now, there's a very basic question you should ask, which is what has to happen to break this? And the answer to that is we have to get behind this supply area right here. Now, I can give you an example of that. See here where we had a buyer come in and he said, hey, I'm willing to buy everything you're willing to throw at me. But look at what happens. As soon as we get behind that guy, he is forced to sell, right? So this guy's under more pressure. Why? Because the general trend in CL is down. Now I don't trade off the 240 period. It just gives me a very clear picture. And what I want when I'm trading is I want all my time frames, whether it's the 240, the 60, the 30, the 15, I want them all pointing in the same direction. I don't want my 15 and 30 pointed up and my larger time frames pointed down. What I want to do, if that's the case, is wait until my smaller time frames align with my larger time frames. Why? My favorite trade is a momentum trade, but I have to be able to identify if we're in momentum. So the first thing I noticed from the 240 is we are no longer in momentum. What has to happen to pick up that momentum? We have to get above this point over here or below this point over here so that we can make a move one way or the other. So the first thing I know is we're in balance. That's important because when you're taking momentum trades, right, as the trade is breaking down, I'm jumping in behind it and selling lower and lower. Now, I do not take this trade, so everyone knows, I do not take this trade in the S&P 500, right? I'm looking for these setups. So I have one set of trading rules, written out process rules that I follow for when we're moving to the downside, and I have another set of process rules for when we're trading sideways, right? So now that we're clear on that, let's move to the next stage, and we're going to try and get this finished up within 10 minutes. We do an incredible job with this in the room. Some people have gotten some really amazing results with profitable trades that they've been able to take advantage of based on what they've learned about being able to tell the difference between momentum and balance and what setups work. So if you take this trade now, and I'm just going to skip a whole bunch of steps, and we're going to go to the 15-minute chart. So when I come into London and I'm coming to the US session, the first thing I'm going to notice is as we're approaching, there is no trend up or trend down. We are trading within, here's the prior day's high is over here, and here's the prior day's low. Obviously, in order to get momentum, you have to be either above prior day's high or prior day's low. So immediately I'm thinking balance, right? I'm going to be less aggressive as we're pushing down because in that environment, what's going to happen is as we press down, as you press down in a balanced environment, what happens is you end up trapping late sellers, panicky sellers, and then they drive them right back up. And then conversely, when they get to the top, you start to suck in buyers, they trap them, and they move them right back down to the bottom. That's how that works in balance. This is different from when we're in momentum. You can see in here momentum, see how we push down, push all the way back up, push down, push all the way back up, push down. And see how each of these responsive buys back up, you can step in and have really nice, beautiful trades. But notice once we go into balance, if you start shorting these bounces back up, you're going to end up getting ripped to the upside. So you have to recognize where your key entries are on this. So now I'm going to take it to one step further. Hopefully I've done a good job of clarifying the difference between how the price action looks when we're in balance versus how the price action looks when we are in momentum, right? So if I've done it in a short period of time, we're going to break down to the 5-minute chart. Again, this is just the basics. Okay, so today, when we look, the first thing I'm going to note is that we don't get an impulse move on the open before London low. We come in, and then we immediately squeeze the shorts back in. This is the 20 period simple moving average. There's nothing fancy about it. It's a substitute for a trend line. It's just a quick visual trend line so I can see which way we're headed. And clearly coming out of London we have some downside pressure, and I'm going to balance that view with the fact that we're not breaking below London's low, and we really need to get an impulse move down and a big expansion. And there's a couple of qualities: the speed of the market, right, the size of the rotations, and the inability for it to counter-rotate back up. It has to be hard for it to get back up. So if you'll look what happens here in the AM, right, we can document it very easily. We open, we dip below, immediately squeeze back up, unable to get above the 20 period. We then roll back over. Notice this is a move from 46.21 to 46. It's pretty much nothing on CL. It's not a significant move. It's not an impulse move, but it does get us below London low. So the next natural question is on this push back up, can we get back above London low? And if you took a very early short, which my entry would have been on this bar right here, you'll notice that you still had another nice rotation down to retest the low. In my eyes, right, looking for responsive sellers here underneath London's low was a fine trade, except you had to realize that there's not a lot of momentum from the higher time frames, and you have to be willing to scale quicker and move stops down. Very much that process of scale, move stops, scale, move stops. CL offers multiple opportunities. I really don't feel like there's a lot of need to take large drawdowns in CL. I'd rather take multiple trades with scaling and stopping than I would taking a large drawdown. Now, what you'll notice is because we were not in a momentum situation here, that we did get initial rejection off this 20 period and on what is essentially the backside test into this supply area right here, and we rejected down. It gave a decent trade, right? It rotated for 20 ticks down. That's a good trade. It's $200 a contract. There's nothing wrong with that. But this ended up trapping exactly what we do when we're in balance. We trapped late sellers. We closed back above London low. We immediately squeezed the shorts. But there was some interesting information here, guys. Right? If this is really a bad short squeeze, it would have taken us all the way back to the other side of London high. The information was in this bar right here. I told you I want to clear it out. The information was all stored in this bar right here. The fact that we closed back below London low, that the short squeeze that took place on this bar, that we couldn't follow through and drive to the other end of the range, told you that there really weren't that many late shorts. We pretty much just got rid of the weakest hands, but that we were weak again. Now what I wanted to see, I did not short this bar. There's no setup for me here. But now we pushed and we broke this swing low right here. And again, there's multiple setups within this range, but what I really wanted to see is for us to get overbought on my, I have a series of indicators and I'll share a little bit of it with you here. Let's move it back over. And what I wanted in this process right here, see if I can open it up and drag it over. So again, this is the here's 8 a.m. Here's London low. I moved this around through the course of the day, and you'll still see my arrows from the work. We finally get, I have a specially modified stochastic. We get to overbought. You'll see that it gets overbought right here. I'm looking for my first lead-in bar, which is basically my first 5-minute bar that closes red. I'm short on this bar. I'm looking for responsive sellers, and you see that we get this push to the downside. And remember, we're putting multiple pieces together in the room. What you were seeing there that was very, very helpful was a pronounced high volume node on the volume profile. Let me see where I have that hidden here. There we go, right there. Let's change this up so everyone can see what we were looking for. And I noted this early in the day in the room. And again, this is mostly designed for the people that are in the room. And what you'll see is, bring that in so it's readable. There we go. So what you'll see is when we were in here was that there is a pronounced, I looked for very distinctive profiles within the volume profile chart. You'll see this is very distinctive, very large. You can see we came down and we tested exactly to the tick this HVN at 45.53 and then found responsive buyers back up. So going back to this chart, again, what I was noticing is I wanted it to break below London low, which was basically 46.16. So I want to go through this process. We trap back in, right? We attempt to squeeze. There's not enough shorts that have been built back up. We close back below. This is not my short here, but now on the push back up, we get overbought on my stochastic indicator. We are below London low. We've made for the time frame, an impulse move, and we broke the last swing low. And now we get the input bar to the downside. And what that results in, right, is an initial scale. Let me go back here. So if we go back to the other chart, so we get the overbought reading on this bar. This is my lead-in bar for sell. I want my stop. I have two choices. This is London low. I really want my stop right behind this wick. I really detest I'd rather take a small stop and get a second shot at it than take a very large stop, right? Capital is very precious. I took an initial scale into this 45.90 area here, moved stop to break even, and then that let us ride this trade all the way down into 45.54 location, and it then found responsive buyers. I did nothing with the push back up, but again, this behavior is very common, and the reason why this is very common is if you look at this low here, right, and how do we know it was not going to break down? First of all, look at the size of the bars. Really small bars down here, right, until we get to the very low. And secondly, when you go back up just a few time frames to the 30-minute process, look, we still haven't, we've penetrated below the last swing low, but we immediately close back in. This ends up being an exhaustion move instead of a momentum move. And that was because we are simply working off this oversold condition. See how strong the down move was? We really have got to get back above 47 to start making anything constructive on the upside. But by that same token, we've got to get back below this 45.32 area to start working on a retest of the low. And there simply was no velocity in this. So anyways, I'm tired. I wanted to show what the highest odds setup looked like today off the 5-minute. We only got one entry, but it was a perfect entry. If you would like to see more, would like to learn more, please send me an email at tradeandperform@gmail.com. You're welcome to have a 5-day pass into the mentoring room where you can learn about both CL and ES. ES is our primary trader, followed by CL. And what we're doing is looking to follow process, end the boom bust cycle, and get traders to consistent profitability with minimalizing drawdowns, and once you get into the sweet spot, really letting your P&L and your capital expand, and hopefully you'll be able to guide yourself once you have that process down so that you're out of the boom bust mentality and you can grow your account to where you envision it should be. Anyways, I'm tired, guys. Have a good night. I will post this in the morning.